What's going on, guys? My name is Richard and welcome back to another episode of my trading rules series. Last time we talked about the three bottom parts of my overall trading process, and today we'll be focusing on the entry setups that I use and actually how I go about buying shares when I decide to take up a new position. So overall, I use five main technical setups: a bounce off the 10-week moving average, a bounce off the daily lower 15-2 Bollinger Band within the past 3 trading days, a green dot within the past 3 trading days, a breakout through short-term resistance, and a green line breakout. And for each of these, I'll be going through in depth, and I'll also be using charts of prior trades to explain how I actually use them on the day. And big picture, the main focus of these is to establish a low risk, high reward entry where you know when the setup has failed. This is extremely important. You want to be using technical setups where you know when it's failed, because that tells you that you should get out of that and wait for another low risk, high reward entry to develop. And this will keep you from having those big losses and will save you from really blowing up your account. So this is probably the most important thing that you need to learn from this video. Have low risk, high reward entries and know when those setups have failed. But getting to the setups that I use, a lot of these are developed from Dr. Wish, so I've kind of taken his style and kind of made it my own a little bit. And the first one we're going to cover is the bounce off the 10-week moving average, which is basically defined as a undercut and close above the 10-week or 50-day moving average. And for this one, you want to set your stop loss just below the 50-day moving average, or use a kind of standard percentage stop like I use, which is kind of my go-to is 3.5%. So for this one, we're going to be talking about Dexcom, which I actually bought using this setup way back on the 9th of April. And first, taking a look at the weekly chart, you can see that it had the big dip. It was forming this handle. It was really tight. And then it started above the 10-week moving average, which is this blue dotted line right here. It undercut it and then finished strong right above it with a positive reversal. So this is exactly the type of weekly pattern that I want to buy using this setup. And taking a look at the daily chart, what it looks like is a start of the week, which is above it, and then an undercut of the 50-day moving average, which is the green dotted line here. And then I bought it on this day right here as it was increasing on above average volume. And that's another important thing. You want to be buying at a time when volume is really coming in strong. And how I do that is by using the volume buzz indicator in TC2000. And basically what this is the percentage of volume coming in that's above the average. So unnatural volume, basically. And you can see that today, Dexcom traded about 200% more shares than normal. And you can confirm that by taking a look at the volume indicator. And this is very useful, especially early in the morning, because you don't really know what the volume is going to look like, because it's heaviest in the morning, then heaviest again in the last hour of trading. So this just kind of helps pick out those breakouts in the morning where you know institutions are buying shares. And with every trade that I make, I keep track of this volume buzz statistic to make sure that I'm buying only when this volume buzz is greater than 0%. But anyway, the actual position was bought on this day, and as I said, I bought it at 10.15 as I saw it was increasing on above average volume and holding above this 50-day moving average. So that is how I use that first setup. And now let's talk about the bounce off the daily lower 15-2 Bollinger Band. And the more I've become kind of experienced with my trading, the more I found that these Bollinger Bands are very, very helpful. And for this setup, this is probably my favorite, along with the green dot. And we're going to be taking a look at the AMD trade that I did just recently. So we don't really know if this is going to be successful or not, but it did get me at a low risk entry where I know if the trade has failed. So using this entry, you can identify it with the blue dots that I have on my screen. And basically the low of the day or the previous day has to be below the 15-2 Bollinger Band, which is this blue area right here. And then you want the close to be higher than the previous day's close and above that lower Bollinger Band. So I got in on this day, and you can see that I've taken no heat so far from this trade, which is great. I was at a profit right away, which is an indication that this trade is likely to be successful. And overall, I got in once again when volume was increasing, although on the day you can see volume wasn't above average. And it's also best to use this setup when the Bollinger Band is very tight. So you want to see a nice tight area right here on the right hand side. This wasn't too much of a Bollinger Band squeeze, but it still was somewhat getting pretty tight on this right hand side. And I often like to use this in conjunction with a green dot. So if that happens on the same day, that's the best possible scenario. Or if the green dot happens on the next day and I see that stochastic is about to cross over, I might wait for the green dot signal shortly after a Bollinger Band dot. So talking about the green dot, this is basically a 10-4-4 stochastic cross when the stock is oversold. And like the Bollinger Band bounce, this has to happen within the past 3 trading days. So to talk about this one, we're going to be looking at Zoom, which I used this green dot successfully twice. And you can see the first entry right here was that ideal setup. You can see a green dot and a Bollinger Band dot happening on the same exact day. And I found this is my highest batting average setup, and it works very well when the stock is already in an overall uptrend. And that's another caveat with both these blue dots and green dots. I would only use them when the stock is over its 30-day moving average, which is this red line right here. So you want a stock to be in an overall uptrend and pulling back to its 30-day moving average and staying above that before you use this setup. And this basically indicates a momentum shift upwards, and it's characterized by the 10-4-4 stochastic. So the fast stochastic is the red line here, and then the blue signal line is a 4-period moving average of that line. And when the red crosses above the blue, when the overall 10-4 stochastic is above 60, that shows you that there's a 10-4-4 stochastic cross while the stock has been oversold. So once again, this is a nice quick way to get a low risk entry, and I managed to get about 20% gain right here, and then once again in Zoom right here I got another 20-ish% gain. And there was another green dot entry just recently. I didn't take this one, but we'll see how this one works out. So that's the green dot entry, and the next one I want to talk about is a pivot through short-term resistance. And I think this is kind of the classic more IBD entry where you're breaking through a prior high that hasn't been broken through before. And once again, volume is extremely important on this. You want to make sure that that institutions are helping that stock break through that resistance. So I'm just going to make a note right here because this is so important. Okay, so let's talk about a setup using this entry. And a good example is using Team. And you can see that there's a couple different pivots here. And basically a pivot is a previous short-term high that has 5 bars lower than it on the left and at least 5 bars lower than it on the right. So right here, I believe this is the short-term pivot right here. It could be this. And let's see what I said. So yeah, at 156.03 is this short-term pivot right here. Then there's another one right here, another one right here. And for me, it's even more meaningful when there's multiple points where it tries to go up to this level, then it sells off. It tries to go up to this level, sells off. And then when it finally breaks through, it can really go. And Team here was very successful once it broke through this pivot, and it's up about 14% in just 5 days, in 1 week. So that's excellent. That means you have a lot of room for error and are able to manage the position, move up your stops right away. And how I use this this entry is you can actually set a limit order right above this level. So at 156.03 is the resistance. I might set it at 156.13, so about 10 cents above the pivot value. And I also can set alerts for NTC 2000 telling me when it crosses that line. So I get an email and text right when that happens. And as always, you can see that this happened on above average volume. And what's important is that there was follow on volume the next couple of days. So this is a sign of a successful trade where you have not just buying that first day, but it's up again, it's up again, it's up again on good volume. So that's exactly what you want to see. And there's been a lot of good breakouts like that recently, especially in that software area. So that is the IBD or pivot entry. And often this happens like right in a handle. So Dexcom also had a kind of pivot breakout. And you can see I drew that in right here, where this is the prior high, and then it broke through around this green dot area as well. And one more thing to talk about here is with these setups, if I start with a half position, so actually this is exactly how I used these setups with Dexcom. I bought first on a bounce off the 50-day moving average, but then I added on right when it broke out into new all-time highs. So once it met this setup, I added 1/2. Then I made it a full position right when it broke through into all-time highs and met that pivot setup on above average volume. So that's a way to kind of handle your positions. Start with a smaller starter position, wait for it to move up, meet another entry setup like a green dot or a breakthrough, a prior pivot. So that's just one suggestion for you, especially back here where we weren't sure if this rally was really going to take hold and have legs. So that is those first 4 entries. And now let's talk about the green line breakout. So this, along with the green dot, is from Dr. Wish. And there's been a bunch of recent strong ones. For instance, we've got Chegg, which had a green line breakout on huge volume coming in. And this is really key for green line breakouts. You want to see huge demand from institutions coming in before you buy the shares. And the green line breakout setup is a close above the green line. So for a huge breakaway gap like this, I'm not completely comfortable buying right away, but you can wait for it to settle down, pull back a little bit, tighten up on that right hand side, and then start moving up. So that'd be a good way to handle this, although it's just kind of drifting higher, which shows you once again that there's huge demand for this stock. So that's one recent green line. And let's also talk about LVGO, which is on my watch list last week. It had a green line breakout the day before earnings. You also had a green dot on that day, huge volume coming in. And then the next day it closed strongly above it, up another 11.65%. And it's just kind of stalling up above it. And the sell signal for this is a close below the green line. Because a lot of stocks, as they break out, they pull back slightly, maybe even dip below it intraday. But it's important to sell them if they stay below it and close below it, but they'll often close above it even if they dip below it. So keep that in mind with green lines. And this is a really powerful signal because this is a long-term consolidation and an IPO, a very strong IPO, and you can see the demand coming in. So this is a setup that's very powerful, and I always like to see that there's more than one setup happening at once. So that is kind of the 5 setups that I use. And once again, it's even better if there's more than one setups happening at a time. So if there's a green dot and a Bollinger Band on the same day, that's great. If you have that during a Bollinger Band squeeze, that's even better. And if you then have a breakout shortly after that, that's the best possible scenario. And that's where you want to add on shares as the stock has proven itself and has met more than one setup. So I hope you guys enjoyed this video, and please let me know down below in the comment section if you have any questions or comments about how I use these particular setups. And I think it's important to mention, actually, before we end the video, that in the morning, I always wait till 10:15 to buy any new positions, because I found that the first half an hour, 45 minutes, there's a lot of emotion. You don't really know if the volume's really coming in. And it's important to wait for that confirmation. So I found that waiting a little bit might cost you a few percent if the stock really takes off, but a lot of stocks fade very quickly right after the open. So in the end, it will save you a lot of money. So overall, once again, these are the 5 setups I look for. And once again, we're looking for low risk, high reward entries. So you don't have to be using my exact setups, but they should be similar in the fact that you know when you're wrong and you get out quickly when you are wrong. But that's it for the video. Thanks so much for watching. Please leave a like down below if you enjoyed, and subscribe if you're new to the channel. And I'll see you guys in future videos.